Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data and how that impacts the overall markets with some market analysis, maybe sprinkle in a little geopolitical fodder to round that all off, and then talk about some option strategies we could implement into a portfolio based on those assumptions we come up with in that market analysis. All right, so without further ado, we do have economic data today. It's the day we've been waiting for. Forward-looking PMI, Purchasing Managers Index. Across the pond, we got the final numbers for their flash estimates. Remember, we get the flash estimates. That's what we really look at. These are just kind of the final numbers on that. And all of them came out as good as expected, if not better, except for Great Britain's manufacturing PMI did come in slightly lower than expected at 52.8. All the numbers, let's say, came above 50, which shows expansion. That's really key right now, is we want to see expansion in the economy, and the PMI number, anything above 50 is expansion. Anything going below 50 is contraction. And then we got European Core CPI, Consumer Price Index, that came in at 8.6, pretty much in line with what we've been seeing with inflation there. Core inflation out of Europe, which, remember, core inflation is going to strip out food, energy, alcohol, some of the more volatile aspects of that economic data point. So core CPI comes in at 3.7, just 2 ticks below the 3.9 there. It is a Canadian holiday. And then later on, we do get our Institute for Supply Management coming out here pretty soon, actually, which is going to be the major PMI number that we look at here in the United States. Remember, anything you're looking for above is 50. It's expected to be on the manufacturing side coming in at 52.4. So that's what we're going to be looking at. The manufacturing forward looking, that's going to be the final PMI number for the flash estimate. Final manufacturing number was expected to be 52. Our Institute for Supply Management, which is the ISM, that's the most important most important data point we look for here in the United States, as far as I'm concerned. As a matter of fact, this used to be called napalm on the floor, and they changed it to Institute for Supply Management because of the connotation of napalm with Vietnam. Vietnam's where we use napalm to basically clear vegetation so we could see. That napalm was what we used to call the ISM. They switched it over to Institute for Supply Management. And we get construction spending as well. Oh, Phil Luo, check him out, Twitter. If you want to watch the Ward vehicle sales, that's going to be going on all day. The manufacturers will be releasing those data points throughout the day, and he's pretty good at getting you guys that information. All right, let's get on with the markets here. Let me move that out like that one. All right, markets. Don't forget to comment over there. I'll make sure I'm keeping an eye on that so you guys can play along here. Crude oil making a little bit of a move here to the upside, retracing half of yesterday's sell-off. I would love to see another new low here. Halfway retracing. Looks like this is going to be moving higher there. I didn't hear what they finally came out with OPEC, but it does not look like it was a massive increase there just based on the charts. All right, bonds moving above the 50-day simple moving average and breaking a lower high there, if you will. So we've got a higher high now if we're looking at breaking a pattern there. Some might say that that's not a very good high. It's still a continuation. So it's, splitting hairs. I would say it's gotten above the 50-day simple moving average. So we have to worry about the upside there. Now it's going to act as support. But with that said, we know interest rates are going higher. We know at this next meeting, they're going to go another 75 basis points for the prime rate or the Fed funds rate, which is going to increase all interest rates across the board. This doesn't really have a whole lot of room to the upside in bonds. So this would be an opportunity to lower cost basis in bonds by doing covered calls. I show you how to do that in some of our webinars. So please check those out at Pro Trader Strategies. You can't really do it for your municipal bonds that you have in your portfolio, you might be thinking, but there are other ways that we can use ETFs to lower cost basis in our portfolio. And I'll show you how to do that in some of those videos there. All right, gold. Losing steam here, moving to the downside. Inflation, not a worry. People aren't parking their money. Bitcoin, I don't know where Bitcoin went, but Bitcoin's same thing. nobody parking money there. It's really a struggle. I think folks are still sitting on cash. They're parking it, waiting to allocate it quickly. So they don't want to do like a sector rotation as of right now. I think there's still a little bit more downside in this market, folks. I don't think we've really seen a capitulation moment where people were panicking. Everybody's just talking, okay, well, we've got a correction. We've been down 20%, no big deal. Well, I think that that's a bigger deal than that, what's going on in the economy. And we could flush to the downside. I don't think it's going to be today. Today, I think, is going to be more of a light volume day. As a matter of fact, most people, it's a holiday weekend, Monday off, they're going to be cutting out even earlier. They might have even left yesterday and not really come into work today. Not a lot of economic data points other than our Institute for Supply Management that those people are going to be really concerned about. That comes out early in the morning. We could see an early exodus from the markets as soon as that number is complete, especially if it comes in line with expectation. If it's not like wildly out of what was expected, for instance, it comes in below 50, that could be a big moment. It would have to come out way higher, and I don't think we're going to see that. So the only thing that you would really be looking for is the concern of it going below 50. So that's what we're looking for at that 10 o'clock number there. All right, NASDAQ showing a little bit of weakness, but folks, everybody's waiting for the data today and see how the market opens up. It feels like there is no real earnest to buy right now. So I think that we're going to see some sell-off here today. It feels like, overnight we did get some selling pressure. It's pretty flat for inventory overnight. We're right about in the middle there. Again, I think that what we'll see here on the open is that people are going to be waiting for this ISM. If it's way out of whack, that's the only thing that's going to really get this market moving. And if it's way out of whack, if it comes in below 50, we actually could see the equity markets make a move to the upside. Why would we see that? Completely counterintuitive to what the markets are saying. Well, because if they see that that number's coming off a little bit, they might ease up on raising interest rates, and the equities could then celebrate. All right. So not that they would be celebrating a bad number, but they're celebrating the fact that interest rates would not be rising. And I could easily see that scenario play out today if we got the ISM to come in below 50. All right. So keep your eyes out for that one there. That's about it, folks. Yesterday, we talked about using Target as a iron butterfly there. Showed you how to build out those strategies. I even show you how to define that risk. Really simple ways, little floor trader hacks for you guys to come up with ideas as to how to define that risk, get your risk reward at the right places, talking about strike locations, all of that stuff, taking the thinking out of it for the setup of the strategy. But before that, it's because we have gone through all of the steps and we have made it to a point where it is basically intuitive as to why you would be buying or selling those options at those specific strike locations. Okay. So hopefully I make it simple and easy for you. Let me know. I circle back around for those comments and love to hear from you. All right. So if you can't take that, take it easy.